And as market operators and investment analysts project another rally in the Nigerian equities market, the consumer goods sector is one of the sectors picked that would deliver significant returns to shareholders in 2018. Now let's look at some of the factors that would perhaps drive this sector in 2018. I'm being joined by the head of West Africa Equities Research and head of consumer research at Exotics Capital, Esili, Eigbe. Good afternoon, Esili. Thank you very much for coming through to us.
Thank you, Chini. It's good to be able to come here.
So tell me, how would you assess the consumer goods sector performance generally so far?
Well, I think that it's been a very tough 2017. But I think that getting into the last quarter of the year, it was clear that the prospects were improving as the operating environment had improved significantly on account of greater liquidity in the FX market due to the opening of the ID window. Those trends remain, and I think even much stronger because of improvements also on the macro front, other improvements on the macro front based on recent indicators that inflation was continuing to trend lower. You're also seeing the forex reserves also continue to build, which itself reinforces confidence that perhaps the central bank can continue to manage the forex market conditions as they currently are. So I think that makes us relatively positive on the overall consumer story in Nigeria, and you can see that in the trend recently in consumer confidence. It's turned positive for the first time in the last 10 quarters. So we're quite encouraged by that and believe that there should be an improvement in consumption this year, which should bode positively for consumer companies.
Now, aside from the FX market, which you talked about, what other factors do you think drove the growth of the sector in 2017? And of course, the key factors that would probably drive it in 2018?
Yeah, I spoke about FX as a bit of a challenge, particularly in the first half of the year, but later on, obviously an enabler. But I think that in terms of sort of fundamental drivers of earnings and performance in 2017 was primarily price increases. Some of those price increases still linger on into 2018 and should support. We still expect additional price increases in 2018, mainly because for a number of the consumer companies, they will still be transitioning into a high exchange rate coming off sourcing FX in the interbank market, where it was selling for around 325, 270 and 325. But because there's less liquidity now in the interbank market, they're having to source a lot more from the INE window where there's a lot more supply. That obviously implies some inflationary impact, which they should try to adjust on pricing. But it still doesn't change the point that we're seeing a relatively positive atmosphere environment for consumption, and that should be positive. Should be a positive driver for volumes in addition to the FX trend I already mentioned.
All right, looking at some of the companies like Nestle and Unilever that have international affiliation, what growth strategy do you see these companies together with their parent companies making in 2018?
I think that's a very interesting question because I don't really see any major differentiating strategy per se. I think that they're very confident about their position in the market, given the demise of quite a number of local and other businesses that were previously importing products they produce. So I think that the focus for them in 2018 is retaining share and growing it if possible. So it's basically taking advantage of the position that the current market allows them. Relatively weak competitive landscape and building on that. I do expect in any case that as competition begins to probably pick up later in the year or next year, we could start to see a lot more innovations industry-wide. But again, that is not necessarily the case right now because we have a relatively weaker competitive landscape.
All right, the full-year results will soon be released. What are your expectations for companies in the consumer goods sector?
We have a relatively stronger year-on-year for 2017 expectations, again reflecting largely a low base effect from the prior year when profits were significantly weaker. Nothing obviously to jump up and down about, What I would expect to see then this year is, a sustained trend. I think that we'll be really, really happy to see, them continue on that track. And to that extent, we're quite positive on names like Nestle Nigeria, Guinness Nigeria, particularly because, Guinness Nigeria is coming from a very, very weak base in the previous year, because this year you're seeing much less interest expense and also much less.
All right, thank you very much, Esili Eigbe. Esili Eigbe is the head of West Africa Equities Research and the head of Consumer Research at Exotics Capital. Thank you for your time. We move on now. In Egypt, the monthly urban inflation rate fell for the first time in more than 2 years as the impact of lifting currency controls eased. The month-on-month inflation rate came in at minus 0.2% in December, its lowest rate since November 2015, while the annual inflation rate eased to 21.9% from 26% the previous month. According to the state-run statistics agency CAPMAS, annual prices were affected by a slowing of the increase in food and beverage prices, which make up the largest single component of the basket of goods and services. Annual food and beverage prices rose by 22.2% in December compared to 32.3% the previous month. On the global oil market, prices hit their highest levels since 2014 today due to ongoing production cuts led by OPEC and as well as healthy demand, although analysts cautioned that markets may be overheating. A broad global market rally, including stocks, has also been fueling investment into crude oil futures. U.S. West Texas Intermediate crude futures were at $63.40 a barrel, 44 cents above their last settlement. They marked a December 2014 high of $63.53 a barrel in early trading. Brent crude futures were at $69.15 a barrel, 33 cents above their last close. Brent touched $69.29 in late Tuesday trading, its strongest since an intraday spike in May 2015 and before that in December 2014. And precious metal market, gold prices edged lower for a second session early today as a rally in equities and a surge in U.S. Treasury yields dented bullion's safe haven appeal. Spot gold dipped 0.3% to $1,309.26 an ounce. Prices fell 0.6% on Tuesday, its biggest one-day loss in a month. Last week, prices touched their highest since September 15 at $1,311. U.S. gold futures were down 0.2% at $1,318 an ounce. The dollar index, which tracks the greenback against a basket of 6 major rival currencies, was steady at 92.517. It touched over 1 week highs at 92.640 on Tuesday. And that's a wrap on today's edition of the program. Thank you very much for watching. I'm Chimeze Obi Iwago.